following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, as always, your bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, then a sprinkling on top, the cherry, a dash, if you will, of some options entertainment / enjoyment / or even perhaps hilarity, depending on your point of view. I don't know how often we delve into the hilarity realm, but we try on more than one occasion, and sometimes we get there, every once in a great while. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding Options Insider Radio Network. And if you haven't had a chance to check out our most recent programs on the old network, then by all means, surf on over to theoptionsinsider.com or to your podcast provider of choice, iTunes, Stitcher, Aha Mobile, wherever you get your finer programs, and search for the wide world of options. And of course, the Options News Rundown, both fine programs, both giving you different viewpoints on the world of options, ONR being more of a quick daily rundown of the top headlines, wide world of options being more of an expansive look at the entirety that is the options market. Check it out if you haven't done so. It's pretty interesting. Speaking of interesting, I got some interesting characters joining me on the old show today, starting off with the man who has returned yet again from the place known as Hither and Yon. He is beaming in from the great state of Maine, none other than good old Andrew Giovinazzi from OptionPit.com. Mr. Giovinazzi, welcome back to the program, sir.
It is a fantastic thrill to be here. I just got to tell you.
It is.
I am thrilled beyond all. I'm even more thrilled than my Zynga trading is. It's thrilling me more than my Zynga.
Teasing, alluding to something we're going to hit on in a little bit. I'm sure you're pretty happy to have some nice Zynga Gamma in your back pocket that's paying off on a rainy day like we've seen over the past few days, or perhaps a sunny day, I guess, depending on your point of view, over there in Zynga land and their change of leadership. All right, and also joining me from the land known as Options Express, you know him, you love him, as the Viceroy. He is Alex Jacobson, the Major Domo of Education over there at OX. Alex, welcome back to the show, sir.
Thanks for the promotion, Mark, but it's good to be here.
Yes, a little bit of a promotion, but we won't tell anybody over there. Just change your business cards, and I'm sure they'll follow suit momentarily with the flood of cash and the nice corner office and everything else that goes along with that nice, handy promotion.
Yeah, well, then I can look forward to a lot of things today.
And last, but certainly not least, joining us from the hinterlands known as St. Charles, Illinois, he is Uncle Mike Tusaw from RCM Asset Management. Uncle Mike, welcome back to the show, sir.
Always happy to be here. Excited to have another year on the books of the great country with which we live, and happy that we live in the best country in the world.
It is indeed a fun country, of course, not to offend our Canadian or European or South American or subcontinent or China or any other listeners we have from around the globe. I know you are many and vast and varied, but we tend to like it over here too, so not a bad place to be, particularly this time of year. Fireworks, hot dogs, barbecues. Can't go wrong with that kind of stuff.
Not at all. I love the political correctness in this show, not to tick off our foreign listeners. I love it.
Well,
we love those other countries, too.
Exactly. Well, I see the map. I see the number. I see where they're all coming from. And, the folks in Beijing and the folks in Mumbai and everywhere else, they may not understand what we're talking about here with all of our 4th of July and our American references. So we like to broaden it to the masses way out there, beyond even the hither and yon that Andrew likes to go to on an almost weekly basis, it seems.
This from the guy who just every week he's calling from Florida to do the show.
I am in Florida a lot, but at least I'm doing my shows. I'm still keeping the business going. All right, speaking of keeping the business going, we're going to have a great interview come in just a few minutes as we roll right on into the interview block.
The interview block.
All right, everybody, you keep asking for more interviews, so we're going to keep sending them your way. And today's guest / victim in the old interview block is Matthew Bradbard. He is the Vice President of Managed Futures and Alternatives over there at RCM Asset Management, making his triumphant return back to the Option Block program. Matthew, welcome back to the program, sir.
Mark, thank you for having me back. I'm amazed. I was on the show before and I got an invite back, so we must be doing something right.
Must be doing something right. Well, it certainly helps that you're active in one of the hot areas, shall we say, right now. We hit a lot of the equity stuff on this show, and Tusaw delves into the commodities every once in a while on the old show here in his little Tusaw rundown. But it's nice to really take a nice deep dive, particularly in some of the things we're seeing these days in the energies and the metals, because that's where so much action is. I know that is your bailiwick over there at RCM. Really quick, before we dive into that, just go ahead and give some of our newer listeners a quick update on what it is you do over there at RCM.
A lot. I wear a lot of different hats. RCM is an independent introducing broker. We deal predominantly in futures and options in 40, 50 different commodity markets. And I would not say RCM is a one-stop shop, but we do have the ability to help self-directed traders, broker-assisted clients. We do a lot of in-house research. We contract third-party research, and then we also do some portfolio construction in the managed futures space as well. So if a client wants to be hands-off, hands-on, we can probably cover them either end of the spectrum.
So there you go, a man of many hats, a jack of all trades over there in the RCM land, particularly when it falls into the futures and futures option side of the fence. Now, Matthew, no surprise, a lot of our eyes here on the show and a lot of eyes of our listeners have turned towards the metals and energy spectrum lately. I'd imagine a lot of the calls, a lot of the write-ups you've been doing over there lately have fallen into this spectrum of the commodities land as well. So why don't you go ahead and give us a little bit of your take right now on what's going on. Let's start maybe in the metals land, because GLD, SLV, the big futures, the options on the big futures, all very active, all generating a lot of interest for our listeners. Go ahead and give us your take right now on what's going on in the metals land.
Certainly. In terms of what's going on with the metals, SLV, GLD, those are two of the major metals that we follow and trade. I mean, it's been an arduous move here in the last several weeks. I guess the saying goes, when you're trading silver, you take the escalator up and the elevator down. And it appears the pace of selling is starting to abate a little. But, we're trading just above $19 an ounce in silver. 10 months ago, Mark, we were at $35 an ounce. And about 2 years ago, we were trading at $49 an ounce. So we've seen, a heavy move down, but it looks like we're trying to find some buying support around this $18 or $19 level. You have an extreme short position with a lot of big traders. So, on a move higher, you're probably going to see a nasty short covering rally. The last time silver was this oversold was May, June period last year, and inside of several weeks you saw a 30% bounce. So past performance is not indicative of future results, but once we get moving north, which I think is relatively soon, you could see a short covering rally that accentuates that move. in regards to gold, if you take a step back and look at gold over the last 5 years, we're sitting at roughly a 50% Fibonacci level right here, assuming you have a low of just under 600 and a high just below 1900. So, I mean, you've seen a lot of damage done, but as long as we stay above about 1160 to 1175, that's where the trend line comes in over the last 7 years. You know, I'm still friendly and view this correction as, you know, a buying opportunity.
So what did you make of the recent aggressive downturn we saw in gold? Do you think it was just some of the shorts?
You're talking about in April when you saw that calamitous move, or just in the last couple months?
The calamitous move, and then in recent months we saw, let's say, a less aggressive sell-off. So maybe we'll start with the calamitous sell-off in April, because we haven't had you on since then, and then we'll move forward a few months to the more recent, yet somewhat still precipitous sell-off we saw out there in gold.
Yeah, that was a monster move. It was scary, and I think a lot of people lost a lot of money because nobody really saw that coming. I certainly did not. Once you got below the 1550 level, which had served as support for the last year or so, inside of 2 days, you know, you were down $170, $180. We bounced came up and tested the trend line several times here in the last couple months, and you know, meanwhile, we're starting to have buying come in around this 1200 level. I'm not convinced there isn't one more washout, but you know, certainly establishing a long after a 50% move lower in the last several years, I think that it merits people's attention taking a look at, where I wouldn't have said that for newcomers at, you know, $1,600, $1,700 where we were 5 months ago.
What about momentum now? You know, Tucson, he's on the show, he always likes to joke that he's still a long-term gold bull. Are you still in that camp? And what about more near-term? Are you more near-term cautious, or you think this is just a minor blip and we're heading back to the sky-high commodity realm that we're looking at not too long ago?
I think you need to be cautious. It's always dangerous catching a falling knife, and that's exactly what you're doing with gold and silver at these levels. But I think you could cautiously step in when the market proves you're right and the low's in. You can add to it, but I think if anyone buys at these levels, they have to, you know, be willing to take some heat, because I'm not convinced the low's in.
I think we touched on this the last time you were on the show, but clearly a lot of our listeners fall into the equity options arena and the index options arena. If they do have exposure to the metals, they're coming to it through products like GLD and the options on GLD and SLV, right, and the options there. So are you very active in those as well, or you tend to stick more towards the big futures and the options on the big futures when you need to hedge and get some premium?
I mean, I track them and follow them because, like your listeners, my clients, you know, don't have all their money trading futures and options with me, nor should they. They may have a stock portfolio and they trade those same instruments. But, you know, RCM, all I'm doing for my clients is trading the futures and options on the futures. But I certainly, you know, pay attention to the ETFs, and I think there's a strong correlation. The difference, obviously, being the stakes are a little bit higher, you know, trading the products I do versus the ETF.
And we don't hit on it as much on the show anymore, particularly now that our good friend Mr. Grigas over at Options Express isn't on the show as regularly anymore. It used to be very much his bailiwick. But of course, there has been quite a bit of movement in the energy, particularly in the oil realm of late. I know you like to dive into that one as well. So why don't you give us your take on the recent swings we've been seeing in the realm of the black gold, Texas tea? Yeah,
I mean, I would be cautious diving into oil. I would certainly dip my toes in the water. We've seen, you know, crude oil trade up, you know, $10 a barrel in the last 3 weeks. It's moved, you know, appreciated 20% since mid-April. We're trading at a fresh 13-month high right now. We've recently just overcome the $100 barrel psychological level. You know, what is this, last week on this turmoil over in Egypt, I would suspect had something to do with the move that we just experienced. Yeah, I think a lot of that's factored into the price mark, and, you know, I would cautiously be selling into this rally. I blindly would not, you know, get short futures because I think the risk is too grave, but, you know, we're getting creative trading some options and futures with some of our customers and trading the WTI or NYMEX against the Brent, or, even doing some crack spreads in some of the products. But to dive into energies is very detrimental, or could be. It's win big, lose big. If you do that, I would test the waters and tiptoe in. But I think we're relatively close to an interim top in the energies.
All this turmoil in Egypt recently reminds me of over a year ago now. It seems like it was more recent than that, but all of that talk about the Day of Rage in Saudi Arabia, and we saw this flurry of nonsensical upside speculation out there in the crude. I think there was even there were people piling into the 200 strike and beyond on some of it. It was just absurd. I wasn't paying that much attention to the paper going into the Egyptian turmoil. Did we see the same, I hate to call it nonsense, but I think I will, the same nonsensical reaction to people really flocking into extreme upside across the board in crude?
I mean, the market tends to overreact whenever you have turmoil in the Middle East, and I think last week being a holiday over-accentuated the move too because of the light volumes. There was obviously a far cry between, the high that we saw near $150 and $100 a barrel. And, there's a lot less players, a lot less money in the market than there was several years ago as well. But, yeah, there's certainly people out there, newsletters that I read, traders that I talk to that are calling for a return to that level. I don't see it. I just don't see it happening on this leg, not even close, in my opinion.
You didn't see people piling into the 200 strike then. And these are people buying very, very short-term, extremely out-of-the-money options. We didn't see similar, shall we say, Hail Mary type buying going into some of the unrest in Egypt.
I mean, there's always those guys betting on the 50-1 odd at the racetrack, and that's, the equivalent of buying these $200 calls, I think. And, there's certainly some volume and open interest there, but not nearly what we saw several years ago.
Hey, Matt, this is Andrew from Option Pit. I just have a question. I have all these reports of domestic supply, and the U.S. will be, energy self-sufficient in a couple years. Hasn't done much for the price of oil over the last 3 to 6 months. Do you have any reason? Are there supply bottlenecks or something that's actually keeping all this fantastic fracked crude getting to the marketplace to push the price of oil down, at least domestically?
No, I mean, I think this is the new normal, and I think prices are going to stay, at lofty levels. That's not to say we can't see prices trade back down to the 70s or 80s. I do think it's feasible, but, if you look at pure fundamentals and where our supply is and demand, I mean, we should be a lot lower. Why we aren't? I mean, I'd be a very wealthy person if I had the answer to that question. It seems like for the last several months, years, energies and a lot of these commodities have shrugged off fundamentals and, haven't traded off them as much as probably they should, Andrew.
Okay. It's shocking me.
I mean, I agree with everything you've said, and I think prices should be low if they traded off the fundamentals and our supplies. They haven't, and I don't know if they will.
So it's almost like it almost feels like all the guys that funds that had their money in gold that just blew it all out and took it and bought oil. I don't know. It's like they're running out of. There's so much cash maybe in some of these managed futures markets now for some of these funds.
They could have went into the stock market too. I mean, you've had a pretty nice run there. Money probably came out of the treasury market with what's happened in that complex here in the last couple months. And if it leaves, energies doesn't mean it needs to go, or leaves metals doesn't mean it needs to go into another commodity market. It could go just into cash or in another currency or, in treasuries or stocks. You see the flow of funds between all these different asset classes.
Right. So just for whatever reason, oil has not responded to just about any fundamental market.
Well, it doesn't respond to any fundamental bearish development, but it moves on a hiccup if there's any bullish fundamental development. Like if you saw the inventory report week over week last week, we saw, I think, a 10 million barrel draw in inventories, and we were looking for a 2 million barrel draw. And don't quote me on the exact level, but I think it was like 10.3 and 2.3, and the market reacted on that, and the futures moved up a couple dollars.
Wow. So maybe there's just, for whatever reason, I mean, the path of least resistance is up. So I try not to fight those if I can avoid it.
Yes, I think that's good.
Mike Tusa here, Matt. Let me jump in a little bit. You mentioned that you do a lot of things along the lines of option spreads or different things in the option world with that. A lot of our listeners are typically equity option traders, and with that, a lot of times what's the level of familiarity is with the inverse VIX to S&P 500 movement. So in other words, if the S&P goes up, the VIX goes down and vice versa. Obviously, that's not the case all the time, but a lot of times it is. How does that relay in terms of volatility in the oil world? And a lot of times,
I mean, if the VIX is trending higher,
let me rephrase that. My apologies. How would volatility be affected by oil movements? Is there an inverse correlation a lot of times, or how do you guys see volatility movement in oil options a lot of times?
I mean, how I interpret that question, and hopefully this is an answer. The more volatility, the higher the VIX, the more expensive it is to play. Now, as an option buyer, that means you're going to pay more in premium. As an option seller, you're going to collect more in premium. As the volatility heats up, which in theory means the VIX is higher, the exchanges may raise the margins, which means it's, more expensive to put on the same trade as well. But, if the stock market's moving up or down, or the VIX is moving up or down, I mean, that may be a small component and factor into the decision, but it's not going to be a deterrent to determine if my client's going to be in oil or out of oil. I'm going to try to look at, the fundamental picture, if you will, and if it's saying buy and the bullish, the technical picture is saying buy as well, we'll probably be in the market regardless of what's going on with the stock market or the VIX.
Got it. Now, in the oil world, if volatility goes higher in the oil, do you make adjustments in terms of being more of an option-based seller, or if you view volatility lower, do you typically do more option buying, or what are a lot of your strategies a lot of times in the oil world?
It really boils down to the client. I mean, it's on a case-by-case situation. Some of my clients don't have the stomach to trade oil. Some exclusively trade in the energy sector. So, we try to customize the strategy, whether it be a, ratio spread, collecting premium, buying premium, a futures against an option, or bull call spread, bear put spread. I mean, all terms that option traders should be familiar with. Essentially we'll look at, okay, this is the client's account size, this is the client's risk tolerance, this is the exposure that he or she wants in the energy sector. Oil's at, X, we think it could go to Y, and we're going to cut losses if it goes here, and, we'll give them a couple different ideas, whether it be in futures or options, depending on really their account size and their risk tolerance.
Now,
Got it.
Matthew, you guys obviously, and you in particular, I should say, really put out a lot of interesting content over there at RCM. So some of our listeners who may be interested in what you're saying here, but maybe haven't taken that leap yet to contact you or aren't in a position to have you manage their funds or research for them, can still access a lot of what you're talking about over there. So why don't you tell our listeners about some of the newsletters and things that you write and how they can get access to those?
Absolutely, Mark. Great idea. I have been writing for over 6 years, and I'm writing a minimum of one piece a day. In most instances, I'm writing 2 a day. I write 3 outside of premium research or specialty commentary pieces. I write 3 pieces on a weekly basis. Every Monday, I put out something called The Line in the Sand, which gives support, resistance levels, what the trend is, what the sentiment is for about the 40 major commodities I trade. So you can kind of have a game plan for the week on what should be on your radar. And then every day I highlight a commodity in the commodity chart of the day where I do my analysis on a commodity, whether it be crude oil, palladium, lean hogs, and give a fundamental and technical case why you should be long or short, or why that particular commodity merits your attention. And then at the end of the trading day, I do something called a commodity wrap-up, where I touch on all the major moves, the major happenings in a 24-hour period. If a new high was made, a new low, we broke the 50-day moving average, we're below the 200-day, volume picked up. So certainly a sophisticated trader can get something from our commentary. A novice trader should be able to take away, because I put most things in layman's terms, and, anyone can sign up for, a 3-week trial to see this content. You can get on our distribution list, and I'm not going to harass you in that 3 weeks. You're going to get my content, and you're really going to get a taste if these markets are for you, or if my strategies appeal to the way you trade. No obligation.
And if they want to get on that list and start reading the Line in the Sand newsletter and other things, they just go over to rcmassetmanagement.com and they can find all of it there?
Yeah, go to RCM Asset Management. They'll land at that site. If they go to RCM Futures, it's more a direct route. And then just look right under our research. There's 3 people that write research internally. Myself, who covers all the markets. Kevin Davitt does some work in energies and metals, and then we have an in-house grain guy, Doug Bergman, that does 3 pieces a day exclusively on agriculture. So again, if you go to RCM Futures, look at the top on the toolbar research, and you can see samples of all 3 of our research.
Okay, that's why I was having a hard time finding. I was going to the RCM Asset Management. Definitely, listeners, go to the rcmfutures.com URL. It's much easier to find it. It's all there right on the top of the navigation. Very easy to find. Matthew, thank you once again for joining us on the show today and shining some light into the deep, dark recesses of the commodity realm. We don't get to do that too often here on the program, so it's kind of fun when we get to tread those waters.
No, absolutely. I appreciate you having me back on, Mark.
Great, thank you. All right, and that is going to do it for the interview block. And now we're going to keep on rolling right on into the trading block.
The trading block.
All right, and those bells mean that it is time yet again for the old trading block, where we run down the day's worth of action and activity on the old street. And it was another broad rally, though not as strong, not as aggressive as some of the rallies we've seen in recent weeks. The S&P closing up about 0.5% on the day to 1640. The Dow following suit more or less, and the Nasdaq being a bit of a laggard, only up fractionally on the day today, about 5.5 handles. Fixed cash selling off relatively unched on the day as well. Of course, a lot of that being some of the holiday weekend coming back in. We see this quite a bit. Post-holiday weekend, they crush it, and then they take it all a little bit back, at least on Monday. So that, of course, probably accounting for a lot of the somewhat meager sell-off we saw over there in VIX land today. But Andrew, you touched on it earlier, so I think we'll just dive into it now. Maybe we'll hit on some of the options in the odd block as well. But one of your favorites, one of the little bells of your portfolio, certainly has had some action of late. We've teased you in the past about your Zynga love, but it certainly looked somewhat prescient of late. So what do you make of all the developments going on out there in Zynga, the new CEO, and this seemingly pretty substantial rally they've had in the underlying over the past week?
Yeah, it was like from $2.50 to $3.50.
That's substantial.
It's pretty good. I like Zynga. I like it at the $2.50 level. Every time it gets down into the twos, I think it's a trade because the company's intrinsic value is about there. I don't think there's much to lose. But I think big problem with Zynga was the CEO. I think he probably did a great job getting the company going, inventing all that stuff. And sometimes it's hard for a founder CEO to make that transition into kind of the active manager, product creation guy that you need to do now to be a CEO. So they've got a guy from Microsoft that seems to be able to do it. Pincus just sits down and counts his dough and, looks for other things to do. And I don't think that's bad from the company point of view. I mean, it worked pretty well for Groupon, right? They got rid of that guy, and the stock, I think, has doubled since then.
It is kind of funny seeing what's going on out here in Zynga, because the guy they picked over at Microsoft, I think to call him embattled over the past few months would be putting it charitably. This guy probably was on his way out, I would think. They had passed him over, I believe, and also he ran the Xbox division. And that division has just been getting destroyed in the media and the press leading into their big industry conference over the past few weeks. And some of the comments that guy made were, I think they called them tone deaf, were pretty atrocious. I think there was a lot of heat that guy might have been on the way out at Microsoft anyway. So it's kind of funny. His comments over at Microsoft have been weighing on the stock for a while, kind of weighing on one of their more profitable divisions over there outside of Office, which is, of course, the entertainment and Xbox side. They're finally turning a profit on that. And so he jumped ship to Zynga, and suddenly that's good news for Zynga. I guess that's probably, people have such a dim view of Pincus that anybody is a breath of fresh air.
I think that's pretty much the case. I mean, I think the other guy seems to have delivered in the different guises he has. He was Electronic Arts, I think, and I think any CEO can say, or potential CEO can say something they probably later regret. And we'll see what happens. Clearly, getting Pincus out of there was what the market liked, so that's how I view that. I still think and I think the stock's always an interesting trade when it gets into the mid twos, and until they can start to generate anything to halt their decline in revenue, and then the stock starts to go up again. I think that's why we're kind of stuck in this range until then. But the options, you trade the sometimes you trade the options to trade the stock, or you trade the stock to trade the options. I think Zynga is one of those cases where I just think the option plays are more interesting because of the nature of the name itself, not necessarily what the company does.
When we talked last, you were loading up on some straddles. Is that still the plan? Were you going back to the bullish risk reversals?
All that stuff actually was bought in. I bought in all the deltas when it tanked. So we actually unwound that. We unwound most of that stuff already. So. It was at one of those places. I don't know if it was worth it just to keep it on for. I actually just went to change and just bought calls once it got cheap enough. Once it hit I think it was like 255 or something. So yes, so that trade worked on the downside, and then bought some stuff on the upside. So the straddles were closed long ago when it had its first tankola. But now, as we go into earnings, I think the option volatility gets fairly cheap in there for how the thing can move. So that's what makes it interesting for me.
So you're eyeing once again, perhaps some upside, some spreads, maybe a bullish risk reversal or two.
Maybe I hate getting long at the 3.5 level until after they start earning, and until after some of these initiatives. Until they start generating their revenue decline stops. I think once that happens, now with all the people they fired and everything, their path to profitability is probably pretty fast, and if they can actually start making money again, it's probably a $5 stock without too much help. So I think you'll have some time between now and then. So not quite risk reversalville yet. Maybe like 3.5, 3. There's not enough juice in the 3 puts right now. So.
Right now, though, all of Alex's ears are just burning because we're talking about options on a $3 stock, and that just that violates his very nature to the core of his being.
I know, but you can buy. It's fun. What are you gonna do?
It is fun.
You can just buy it, and I know it kills Alex, but
it can't just be all Apple all day long. You got to have some little cheapies in there too.
It can't be all Apple on the Idea Hub all day long.
Keep in mind, when I grew up in this business, we would have had to delist Zynga.
I remember $3, like all the biotechs in the early 90s. Oh my God, my stock's going to get delisted. It used to trade so well.
I watched Home Shopping list and delist 3 times.
Well, that's what makes the option market great. They can all come back for another shot at it.
You have infinite lives, infinite lives to keep with the gaming metaphor here.
If I didn't have the 2 strike, how would I do a lot of the option insider, all the odd block stuff? A lot of it's not like the guy buying the 4-level calls when the stock's $2, he's paying 50 cents.
Yeah, the guy paying $1.50 for the $4 calls on the $2 stock. Where would we have those?
How would our listeners be able to read those little nuggets of wisdom there? It would be brutal. No fun then. No fun at all.
No fun at all. Speaking of no fun, we turn now to St. Charles, Illinois. Of course, I am just kidding. Of course, Uncle Mike, you like to delve in the metals. Metals have been pretty active. We just did a nice rundown on the metals. What else is catching your eye? What else is taking up your day over there in RCM land since last we spoke?
Well, I think since last week, just to kind of update a lot of people on how I've been working with gold and silver recently, with GLD, this time around, or this expiration cycle, in lieu of a collar, what I've been doing is kind of a modified weekly, I'll call it the Giovinazzi do stuff type straddle, modified hold the underlying type straddle. So in other words, long 100 shares GLD, long two, not one, but two 119 puts for the month of August. And then what I've been doing to kind of hedge the time decay in the puts, instead of selling a covered call, now I have two puts to account for all of the theta in. What I'm doing is actually selling weeklies against one of the puts. So in other words, what I'm doing instead of selling a covered call is I'm using a calendar spread. It's taking extra cash to do so, but the amount is not significant enough to actually have much of an effect on people's portfolios. So concept behind it is that my take on metals right now, yes, I am a long-term bull, even though I've been thanking the Lord very frequently for the use of put options on my metal positions in recent months. But in the short term, I think that we have an opportunity to sell a little bit of short-term premium in the weeklies. And then if gold does go down, and I'm doing something similar with silver as well, but if we do keep bleeding down slowly, so to speak, and by slowly, I'm thinking maybe like $3 a day in GLD, which I guess isn't really slow, but at least at the levels with which we have been. This is one where it can kind of create a straddle, and you can actually make money on the short side of it. So with it, if that's the case, then that's what we're looking to do. But if gold does shoot to the moon, kind of like what silver did a couple of years back when it went from 18 to 48 in what seemed like 24 hours, we're ready for either side of this. Where I'm going to get burned on this is that if we have a lot of choppiness to the upside and to the downside, that's going to definitely do some things to the old BBI.
Yeah, that's when the do stuff really kicks into high gear.
Yeah. So far, it's been working out well from the standpoint that having the extra put in place, it's worked out. And if we shoot right back up to 130 tomorrow, then I need to be ready to adjust that extra calendar spread, if that makes sense.
And speaking of being ready, it's time to roll on out of the trading block and roll right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and let's dive right into it because we are running a little long here on the old show today. Always happens when we have one of those great interview blocks. We tend to dive into everything else, but it's a fun one nonetheless. Let's kick things off in the old odd block with a name you know you love. It is Zynga. We were just talking about it earlier in the day. Of course, this name's been moving around quite a bit of late on news of a replacement at the top of the old ship. The stock closed today down about 4% to $3.29. Not surprisingly, given all the news we've seen of late, a lot of people flocking into some upside here in Zynga. Now, Alex, cover your ears because we had people coming in buying 8,000 in a total, actually 8,000 in the morning, a total of 35,000 on the day of the AUG 3.5 calls, going in for prices around 20 cents, 22 cents, 19 cents, in that range. Now, we got some substantial open interest on this strike, but still just a ton of options, particularly calls, lighting up the old tape. Does that come as a surprise to you, Mr. Andrew?
Well, of course not. Nobody's buying it at 2.5, but they're buying it at 3.5. That's my.
Yeah. You love it. You like it at 2.5. You love it at 3.5.
I guess so, but I think there were some combos that went up, but the big chunk of the calls was actually looks like just a straight buy. It was like 8,100 contracts, a little bit over that. So it just looked like, I think 22 cents again, not very expensive premium for this stock. So, it's been moving around, and the 10-day implied volatility, like I said here in the on the odd block, was 81%. So it's still moving pretty good. And the options just aren't that expensive. So somebody's just taking a whack that Zynga could be a $4 stock again. That's, and that would give them, pretty easily more than 100% return on the calls. So, I mean, it's in this one of these cases where you have an underlying that has a slow price, but it's moving, pretty rapidly. Sometimes those cheapy calls through the earnings might pay some big dividends, but it's a pretty big shot still. Since Zynga has not been able to get over 360. And they've got to have an earnings report that doesn't curl people's hair for the first time in 2013.
Yeah, and everyone jumping onto this new CEO bandwagon. He's not going to be able to impact the numbers for now, so it's all kind of moot right now, at least. I guess they're all looking ahead to all the many things he will bring to the company down the road. Speaking of down the road, we're going to keep on rolling right into one last one here on the old odd block. This is Elan Corp, ticker symbol ELN. This is a bit of a weird one. This is the name that closed $14.20, up about a dime on the old day today. This is the name that does about 16,000 contracts a day, so fairly active from odd block standards at the very least, but doing 85,000 contracts today. And a lot of weird stuff going on out here. We started it off with a roll, at least it looked like a roll for the most part. We saw paper coming in and picking up the July-Jan 14 call spread. Looks like they were rolling it out to Jan 2014 for about 70 cents. It went up about, when we wrote it up, it was about 8,500 times. The numbers have since increased. Andrew, have you been paying attention to this throughout the rest of the day here?
Yeah, you know what it looks like? I think this call spread was a roll because there was huge open interest in the July prior to, so the July 14s. So I think this might be the long holder selling them out and then buying the Jan 2014 calls. I think Elan's a takeover candidate, or they have walked away from a couple of bids, keeps pushing the price up. So for a deal, and what's interesting to me is if you're buying the Jan 2014 calls in a deal stock in a cash takeover, all that stuff's going to go to parity. So there is some risk to buying those 1 year out options. So to me, it just looks like they're looking for that. The company's going to be in play for a little while longer and a higher price. That's a lot of strange paper though on it.
Should probably turn myself back on. There we go. A lot of strange paper really lighting up the old tape here in Elan. We also saw it looks like the AUG 14 puts being blasted out like 11,000 times on paper on just 60 open interest. 14,000 of the AUG 15s going up again on just 300 open interest. So a lot of odd paper. Might take some time.
Feels very longish.
Yeah,
paper.
A lot of it does. Blasting out the puts to buy the calls, maybe legging into some bullish risk reversals there. Maybe part of that July, they dropped it off in AUG. They end up doing 21,000 of the July 14s. Maybe they stopped part of it in AUG 15s and rolled the rest out to Jan. I don't know. Maybe doing a nice two-saw time, stupid.
Because there was 53,000 open interest.
Yeah, they have some to play with.
So
you caught me.
Yeah, I knew it. The old two-saw time stupid strikes again. I always know a stupid when I see one, sir, and this has two-saw written all over it. This is an interesting one. I encourage listeners to surf on over to the site, read the full alert, and this is another one clearly we're going to keep an eye on because there's just so much paper to parse here. It's kind of hard to do it in the time we have allotted. But keep an eye on Elan. Obviously, maybe some corporate actions looming and people positioning ahead of those and probably rolling this stuff out to give themselves a little bit more of a time frame. Speaking of time frame, we're going to keep on rolling right on into our next segment, Around the Block.
Around the Block.
All right, everybody, those car horns mean that it is time for our final segment of the day. I'll wipe away that single tear because it is, of course, Around the Block time, and I neglected to mention it at the top of the show. We touched on it last week. It is, of course, the official kickoff to earnings season this week with the big Alcoa, ticker symbol AA. They reported after the close today. Looks like a resounding unched if the numbers have indeed come out already, and I'd wager they have because the stock closed at $7.92. It is $7.91 at $7.93 in the after hours. So there you go. Resounding kickoff to the earnings season. hopefully, Andrew or Uncle Mike or Alex, you have some other names on the horizon that you're watching that are perhaps a little bit more interesting than what's cooking over in the land of Alcoa. Mr. Andrew, let's start with you. What are you watching for the rest of this week, sir?
Looking at these emerging markets to see if that, they stopped cratering basically last week, and they haven't done much. So the U.S. equity market has come back a little bit. I'm trying to see if there can be any life, breathe into those markets after everybody did the massive unwind trade. And left those markets, pretty decimated, down 10, some down 10, 15% for the year, at pretty attractive levels, to be honest. So that's kind of where my focus is, and, waiting for the Bernanke to throw his minutes at us and tell us that, they're thinking about stop buying bonds, which I believe the market has already figured out by now. But those are pretty much the two things that I'm looking at right now. It looks like there's interesting opportunities there.
Waiting to dive into that delicious Uncle Ben's rice, eh?
Yes.
All right, thank you for that, Mr. Andrew. And Mr. Tusaw, what's catching your eye? What's causing some sleepless nights over there at RCM for you for the rest of this week, sir?
Oh, we always sleep pretty well over here, but nonetheless, the things with which we're looking at, Russell 2000, curious to see if we can make some new highs in that in the coming week or so. Want to see if we can get through that 1010 mark. I was kind of curious on that. That's one thing that's catching my eye. And just to kind of add to what we talked about a lot in the interview block, is gold or silver at a support level right now, and continuing to watch those. I think we're at some pretty key levels in a lot of areas right now. So yes, we are in earnings season, so combine that with the fact that the levels with which we're at, we might be knocking on the door to making some new highs in the stock market. Time will tell.
Indeed, time will tell, and it will also tell us what the Viceroy has cooking on his mind for the rest of this week. Mr. Alex, what's catching your eye here, sir?
I'm going to mimic Mike and our interview guest. I think the earnings season is not going to be that big a deal. I think it's going to be a non-event. But I think everything we've heard today about gold and energy, we can disagree about direction, but I think we're going to have the possible setup of some large events here. And I would be owning some ratio spreads. I had a hedge fund client many, many years ago who had ratioed in futures options both gold and energy, and with very little risk ended up owning direction. Basically sell the straddle, buy two strangles, do it on both sides, don't spend a lot of money. I will remind everybody that's how Soros took the Bank of England for a little over $4 billion with very little risk. But we heard our guests talk about $70 oil. If you think that's a possibility, I would like to own that $30 move, that $30 plus move in a managed risk fashion. But we've also talked about strife in the Mideast. So I'd like to be positioned for a $30 up move too, if the canal closes and strife continues. So I would look at owning some stuff in this environment, but in a managed risk fashion. The other curious thing is we talked a little bit about energy. We talked about gold today. We didn't talk about the 10-year, and this is an homage to Don Schlesinger, but the actual daily vol in the 10-year has been bigger than the vol in gold and the crude contract. The 10-year has been bouncing today a little over 3%. So that kind of vol is an option trader's dream. I would look at owning some premium or owning some spreads to take advantage of what this marketplace looks like it could be setting up for.
Of course, that tip of the hat to Mr. Schlesinger is indeed a nod to our very popular Volatility Views program. Currently on hiatus, we're looking to bring it back very quickly for you listeners, so stay tuned for the revised, revamped, revitalized Volatility Views coming to a radio network, preferably ours, near you sometime soon. But unfortunately, that's all the time we have for today's extra special episode of the option block. But before we go, as always, I like to turn the tables and check in with my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods that may interest you, my dear listeners. Starting off with you, Mr. Giovinazzi, what is cooking over there in the land of the pit?
And coming up, Option Pit today, or not today, but at the end of the month, we're having our little Pro Trader Summit, which is close to being sold out, actually. I think we have a spot left. Where we'll be playing golf, we'll be eating steak, we might even see Mr. Longo, and a lot of our pro and platinum gold clients will be there, so we could do the kind of intensive workshops with Mark and I on trading, trade strategy, and and basically doing stuff, which is what we do all day.
It will be the Doing Stuff Andrew Giovinazzi seminar.
That is it. I think we should just change the name. I wonder if anybody would show up for that.
All right. Thank you for that. And I will remind you that I prefer my steak medium, although I can handle a nice medium well on occasion if it's done right. So keep that in mind, sir. And next up, Mr. Tusaw. What is cooking in the land of the RCM webinar train?
I am driving that train this Thursday night. We're going to be talking about risk management. Plan the trade, trade the plan. I'll be donning my fedora. I will be the speaker this week on TNT. So for more information on that, go to the RCM website. We'd love to have you come to our webinar this week.
I wouldn't mind seeing that Plan the Train webinar, too. I really haven't seen one of those before, so it might be some new information for me.
Well, with what's been going on with the Metro recently, I think we might need that.
Maybe you can do a nice little model train setup, how to lay it out, put the trees just right. I think that'd be pretty well attended.
I think so, too.
And, of course, I'm still waiting for the ever-popular Stupids. When that is finally approved, let me know, because I will be the first to sign up for that one. Quality
one
stuff
of these days.
Quality stuff's there. Speaking of quality stuff, we shall also turn our attention once more to the land known as Options Express. And Mr. Viceroy, what is cooking in the land of OX education that may interest our listeners?
Well, there's a full pattern, as we used to say in flight school, of webinars over the next 2 weeks. And I not even going to pick one to showcase. Marty Kearney's doing them, coming over from the SIBO. Jim Wyckoff, I'm doing a couple Idea Hub. We're doing a lot on futures and futures options because of the phenomenal growth we've experienced there. New streaming charts, talking about those. The new walk limit product will release later this week, which will have a timed walk limit on it. Come to the site. All the webinars, all the educational events are free. You don't need an account to come to an educational event, but it'd be nice if you opened an account. Even if you open a virtual account, that's something you could do free of charge and trade both futures, options, and underlying stocks in. So a full pattern of webinars, almost too many to mention.
Speaking of webinars, our listeners must know, how did the July 3rd webinar go?
I had about 48 people.
There we go.
Whoa.
See? We plug it on the old show, and they show up. They know this is their chance. I bet you a lot of them were disappointed. They thought they were going to have a one-on-one with you.
You would be amazed the reach of this show and the impact it has at restaurants and especially places where I'm either improperly dressed or tired and scratching or something. But the reach is amazing.
So there you go, Tucson. We might have put a lie to your old adage then. July 3rd is viable, perhaps if you got some one-on-one offers dangling with Mr. Viceroy.
I guess so. Well, mine was 10 years ago, so.
There you go. All right.
But I am impressed. And I've always said this, too, though. If you ever get a chance to hear Alex Jacobson speak, you run. Don't walk to that room or that webinar to listen to him.
Indeed, and hopefully all of our listeners got some great mileage out of that webinar. Sorry it couldn't be one-on-one as promised, but 1-on-48, still pretty good. And that is going to do it for our show today, but we'll check back in with you on Thursday In the meantime, of course, we want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and indeed attending good old Alex's webinars. We love that when you guys write in and check out our stuff. Check out Mr. Tusaw's webinars over there as well. A lot of great stuff cooking with the various aspects of the old option block, and we'll see you again later this week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.